Good morning, SMF MMTs. Here we are gathered today to get some price action made in the SMF market maker platform, and it's all right here. So what the S&P is doing, MMTs, we're going to go on full 8 trading days of when the reversal started. Every pre-market, we tell you, MMTs, that the market makers have been sliding the bids, as you're aware of. You can see where the platform and the numbers on the S&P here are not doing their thing. And what does that mean? It means that there's no buyers there. They're not buying is what that really means, that statement. So basically we have problems on some of these. So we're going to be watching where the price action. Senior traders keep sliding the bid, as we have shown on all of the equities as well. So the S&P can't break out. The VIX has been climbing higher intraday. That's the back half of this S&P 500 chart. So you can see what it was doing all day, going to the left. So every rally that you got, you were sliding that bid and getting net short. Equities were falling in the same pattern. Slide that bid, and the short gets put on and to the left side of the market. So what's the left side of the market? It's very simple. When your platform is telling you that that's descending, you're short. In your SMF MMT right here. Half bar failure, like right here yesterday, here's a half bar failure right here, 1239.82. When we started to break below that bar, that meant that we were closing 59 pennies below the previous bar. That's when the ratios get weak in your SMF market maker platform. Tells you when to be short and when to be long. You got your voice alerts. You're ready to go in combat. The key on the S&P today is going to be that if I've got to get a closing price up here. This is where that last intraday where they really slid that bid right here. See what it tells you in your info panel? Bam! Short. That's the way the tape was. That's where the money is printing, MMTs. And equity prices follow. And the fear traders also will be breaking out. You will know where that momentum is. And that momentum has been every single day since we started that topping process in December is slide that bid. What we've been looking for is when they pull back and consolidate, break higher, pull back, and the pullback is price action. So, but the pullback within the price action diminishes. In the brain here, it'll tell you that the teeny pullback are going to be smaller. Bounce, pull back, consolidate. Okay, the platform says there is no strength in that. That's why you got to keep selling short. Until that trade comes off the table, they're still doing it. And, you know, December's part of that is that people are selling into the multi-highs. Some of it is to do with people having to close out some year-end positions as well. There's a little bit of balancing going on. That's part of it. People are thinking about the new year. People are thinking about how to cut stocks like the big gainers, like, let's say, things like the big shorts here on Netflix. That this stock here, they ran it right back up and, you know, close to that 200 handle, and that was a kiss goodbye $20 ago. So what it means is they're cutting some of the bacon off of these big winners in 2010, and that's why December is slide the bid. Because basically what they're doing is they're taking the names that performed real well and they're selling them. And when they're selling them, then you need to be selling short right along with them. And they're selling to take profits, and you're shorting the weakness to make a profit. because that's what the market maker, he's the one on the floor. If there's no public buyers there, well, then he's going to go the other way in the tape. MMTs, let's get a grip on that one. So basically, I'll keep this tape short. The S&P is going to be the primary focus. And when we look at it also in a standard charting platform, this is the public model, you can see here also from from this view, but this doesn't make you money, but you can see where the breakouts have been or haven't been on a 60-minute chart right here. So basically we're back over here to this major line that's going across what used to be tops and would come back. Well, we did have a breakout. The breakout occurred right here. However, for several days, you can't take out these tops, and you're sliding that bid, and that's that directional overall movement right there. And same thing over here. And even longer in the tooth when they start to the bottoms. Then you have your mini breakouts on your 60-minute on the S&P. If the S&P cannot maintain, just like I showed you in your platform, if the S&P cannot maintain a closing price here in the brain on your 3-minute chart above 1240, and that's resistance, and that means that equities are going to go up and then they're going to be shortable. Okay? If the bid and ask trend ratio in the brain is working a certain way, then that means that the price action is building weakness in, and you know where you have to execute immediately as an SMF MMT. This is a platform that the public never ever will get their hands on. It was designed for market maker, MMT. And basically what it does, it deciphers the public transactions, and you're taking them. So when the public isn't there and they have to slide that, your market maker platform tells you to slide it. Your market maker platform also tells you to take that buy right here. So S&P has to close up above that 1240. That's what we would like to see. If we go up to the 1240 handle and we can't get a closing 3-minute bar above it, then that means that we would be weak right out of the gate. Diminishing volume is what we're looking for as well. Diminishing price action for momentum for the bulls. The bears, your status would be keep doing what you've been doing, and that's sliding that long left to the market. There's a very long, deep left price action market here, and that's for the bears right here. That's for the shorts that want to make money. And that's what we do. And that's what this is about. This is about making money, MMTs. That's the S&P 500 update.